Welcome to our daily market update. This is Wednesday the 25th of March. My name is Chris Marshall, Head of Investment Strategy here at Dragon Investment Managers. The past 24 hours have once again delivered us a plethora of market policy and economic data, with the Dow Jones Industrial Index closing out the day with the largest gain on its books since 1933, really as investors take a more optimistic light and turn to a more risk-on mood as they see so many government policies, relief bills and central bank action take hold. In previous market updates, we've talked about the three things which really need to happen for investors to develop more of a risk-on mood. And this was looking at making sure that the financial system is likely to keep flowing. And this is where we're seeing the central bank's role to make sure that they keep this system from freezing up as it did in 07 and 08. Of course, that's only one part. The other part is, of course, keeping corporations alive and keeping them almost on a life support while economic slowdown inevitably takes hold. And this is really where we're seeing many of the fiscal stimuluses coming through from governments. The UK has already got things in place, such as the 80% of payroll measure. And this is really the significance of what the Senate is now looking at, that we haven't seen the finer details, but we know that very early this morning the Senate came to an agreement on this $2 trillion relief package, which would see provision to really soften the blow for many of America's smaller businesses. Remember, they have around 30 million smaller businesses. Often it's this part of the economy which has the lowest savings rate. They really do live hand to mouth, and therefore the cash flow implications of closing down some of these businesses is significantly large. The other thing that we'll be looking for in this relief bill is what provision has there been made for cash to be directly given to the American citizens. Again, simply because we've seen that many layoffs have already happened, and I think we will see an increasing number in the unemployment rate in the US. Those are two of the investors' fears. But of course, the third is, how long will this continue? And this is where we had started to take some optimism from Italy, where we thought perhaps they had reached the peak of coronavirus deaths. Unfortunately, yesterday they posted the second deadliest day. However, I think the markets are still taking some optimism from China. Of course, Wuhan, where this virus initiated, where it originated, has seen that some of those quarantine measures have been lifted today, with a citywide lifting plan for the 8th of April. In terms of going back to work, and I'm certainly no epidemiologist, but from speaking to a number of epidemiologists, really they hope to see that mass testing will come in which case there is every chance that people can go back to work and the economy can, to some degree, go back to a place of normality. Of course, I think it's going to be a very different world that we eventually go back to, certainly in the early parts. But if we could emerge, certainly from the UK, we're of course in lockdown, as are many other parts of the world. We're seeing those kind of restrictions to retard the growth of coronavirus through the world and through the populations. If we can emerge from that with mass testing, and this is one of the areas where we're seeing so much creativity and innovation. As we went into this pandemic, testing was still very much a kind of a 3-day, very expensive process. We're now seeing that creativity and innovation from so many testing labs that they have got this down to minutes, 45 minutes. There's a company I was speaking to yesterday who believe they can accurately test to 98.5% accuracy within 3 to 5 minutes, and they're now seeking approval for that test. The cost of such testing then comes dramatically down, and if we are able to test everybody, then of course those who don't have coronavirus. Another area where we're seeing this collaboration, this kind of creativity, is in the ventilator space. The UK reportedly only has 8,000 working ventilators, which is far short of what we will need. However, we've seen a rallying together of many industry giants, such as Formula One and Airbus, coming together to really try and reverse engineer a number of ventilators which would provide the UK with a much better medical infrastructure. And this is potentially some of the things that a delay in the growth of coronavirus and why isolation is so important could really help change the economic landscape of the UK. Now, of course, one of the measures that we have to be looking for is, do the policy response, the fiscal response, the monetary response, do they help soften the blow significantly enough? We are undoubtedly in an economic recession. Technically, that is 2 falling quarters of GDP. But do we see that the policy response is going to be enough to save this from becoming a financial crisis? And I think we are seeing encouraging signs in the market that things are starting to work a little bit more normally. We had seen some liquidity issues in the market. We had seen correlations between assets collapse. It's quite often the case when you see markets in downfall that correlations don't hold. And we have to bear in mind that we saw one of the most rapid declines in history in financial markets, 15 trading sessions down, some 30% in some markets. But those correlations and the normality of their asset behavior is starting to come back through. We're seeing liquidity situations improve, really from the central banks stepping in. We have seen unprecedented measures from central banks, such as the US Fed stepping into buying corporate paper, that's corporate debt, both in primary and secondary markets. And really kind of the relief bill that hopefully will come through from Senate and then come through the House and eventually signed off by President Trump will again give investors that little bit more optimism, that little bit more hope that the financial landscape and the economic landscape can be cared for. I don't believe this is the end of the measures that we will see. We continue to look at the positions that we hold in our portfolio, believing that that holding a defensive stance as we are right now is still the appropriate move. We have started to deploy some cash into some of the areas which we feel are vastly undervalued, have suffered from an overselling. It's not to say that we see this as the bottom of the market. One of the encouraging signs that we look to is the VIX index. This is volatility index, and while we have seen this fall for the last 3 days, we have to bear in mind that when we look back to previous crises, we have seen this fall, the VIX fall, the volatility fall in markets way before we actually see the bottom of the market. So for example, in 07 and 08, I believe the VIX started to fall in November 08. However, we didn't actually see the bottom of the market until March 09. So we are watching all the indicators, some of the PMI data, which is really showing kind of how fast the economy is growing, are showing some pretty horrid numbers. But this is to be expected in an environment where not only governments are closing down massive sections of the economy, but also we're seeing people isolate and quarantine measures. And so we're not surprised to see economic activity take a massive hit right at this time. For us, we will continue to monitor our positions in our daily market updates. If we take any tactical stances, perhaps we can deliver those to you at that point. But for us, we continue to monitor what's going on and really kind of just translate that into how we feel we should be positioning our portfolios.